welcome back to Dukas Copy TV. Now, over the past decade, mutual funds invested nearly $70 billion into Bric stocks, causing the economies to grow 4 times faster than that of the US. But with each of the Bric nations now facing difficulties of their own, the question on everyone's mind is, will the Brics continue to emerge? I'm joined today by Thomas de Saint-Seine, CEO of Real Asset Management, to give me his view. Thomas, thank you very much for joining me today.
Thank you very much.
Now, first of all, what caused the growth in GDP for the Bric nations previously?
Okay, so the reason and of the growth and the trigger was really the entry of China in the WTO in 2001. This has allowed, in fact, China and the other emerging markets to benefit from strong investment from developed countries. And I think definitely this is really the explanation of the tremendous growth we saw in this area of the world.
But now Brazil, Russia and China, all their currencies are the most weakening out of all emerging market currencies. What has caused the current turmoil in the Bric nations and also all emerging currencies?
So there are different factors. The first factor, of course, is the situation in developed market. So we had a strong flight to quality during the past weeks, past months, and it has been in favor of the US dollar. So that's the first explanation. The second one has been also the fact that commodity prices have been down, and among the two currencies you mentioned, especially the Brazilian real and also the Russian ruble, they are very correlated to the commodities. So these are the basic element, but also there are some structural problems, we can say, in some of the countries, especially in India, where you have problem of corruption. You have also problem of inflation. So there are many reasons at the end to say these currencies have to go down.
Bric governments are now working overtime to try and strengthen their citizen spending. Will these developing giants continue to thrive, do you think?
I think we will continue to have growth in this area of the world. But one of the main challenge for this economy will be to control the inflation. So if they are able to control their inflation, they will be able to develop the domestic consumption. Because to develop this domestic consumption, you need to ease the monetary policy. And that's, I think, for me, an important challenge for this economy.
Does the latest weakening data put doubt on the theory that emerging markets can thrive no matter what else is going on in the rest of the world?
So the reason, so first, what I like to say is that there is no decoupling of the economy. So now the economy is very global in the world, and we know that there are a lot of interconnection between emerging countries and developed markets. So this fact, of course, will remain. But if emerging countries succeed in developing their domestic consumption, probably they will be in a position to reduce their exposure to developed markets. But all in all, they have, I think, at the end of the day, they will bring more growth than developed markets that also have their own problem.
I see. And lastly, where would you advise people to invest now? Would you ask them to look to smaller countries which have perhaps been overlooked in the past to have a bigger return on their investments in the future?
I think so. What we do, because we are a fund manager, so the first thing we look at is the quality, the intrinsic quality of companies. So we really have a broader look of the economies. I think there are some structural problems in some of them. So for us, the key driver of our investment is the underlying qualities of companies. And if you look with a broader view, you can see that it's not necessary in the BRICS country that the best opportunities are. And we are at the moment looking at countries like Taiwan, Korea, South Africa, and they don't have the same problem as you may find in India, for instance, or even in Russia. So we prefer to have this larger view, and really we give more weighting for the intrinsic quality of companies rather than the fact that they belong to one specific country.
Thank you for coming into the studio today, Thomas. It's been a pleasure to have you in.
Thank you very much.
That's all from us here at Dukas Copy TV today, but stay tuned because next we have an interview on what new media can do for the financial services industry. So stay tuned.